St. Jude. Thank you. Good to see you out there. Hello, everybody. Different story today. Hello. This is going to be one of the rare videos I do without any numbers. So let's give it a shot. So we're going to talk about some of the Bitcoin concerns that's pertaining to some of the goings on around the world right now. And we're going to talk about debt, credit card debt, debt ceilings a little bit. We're going to talk about Cardano a little bit. Tesla, Netflix, some credit card companies, and a whole bunch more. Let's jump in. Thank you all for being here. Disclaimer, of course, edutainment. And the story, well, let's just jump into it, not waste any more time. But the funniest thing was, yesterday we got one of those gentle black swan events, kick in the teeth. You know, the government overhyped the Bitzlato. Sounds like a Russian coffee. Might actually be a good brand of Russian coffee. I don't know. But this was a funny joke from Bitcoin Archive. Bitcoin just smashed 21,000 and recovered all the losses from the catastrophic Black Swan event, the fall of the great Bitzlato. You will not be forgotten. I thought that was hilarious. Good way to kick it off. But it did bring about some concern. And also, a lot of people were worried because apparently the Department of Justice, that is the group in the US that kind of keep everybody safe, who let all the FTX stuff happen right under their very noses, spent years going after these guys that nobody ever heard of, which the irony is not lost on me. But one of the problems they did mention, which is a little bit of a concern, they said nearly 2/3 of Bitzlato's top receiving and sending counterparts to darknets and scams. One of those counterparties, the number one counterparty, they said between 2018 and 2022, was Binance and two other rando companies I never heard of. So that is not a good look for Binance. Anyway, moving on from there, a little bit of good news regarding Bitcoin. And this is from the On-Chain College. He says 49% of all the Bitcoin supply has not moved in at least 2 years. And this is another new all-time high. Put differently, that's nearly 9.5 million Bitcoin. That is parked, maybe forever. So despite all of the black swans, all of the stuff that's happened, people who are in it, they're in it for the long haul, and they don't care about the short-term undulations in price. Now let's talk about ChatGPT, a little bit of hopium stuff here. This is an article from Finbold, and they asked ChatGPT, I did as well, it didn't actually give me the same number, so I don't know how they phrased their question, but they asked what ChatGPT thought the Bitcoin price would be by year-end 2023. And Chat said between $50,000 and $100,000, which coincidentally, the 50K is a potential line that I see happening in April 2024. Not before then, but anyway, we'll see. We have noticed though over the last couple of weeks, Bitcoin can move very fast when it wants to, and the supply is scant. Again, remember the On-Chain College graph here? There's not a lot. And no matter what the price, some of it just isn't moving. So moving on from there, this is kind of a disturbing story that came out today. And I did cover Peter Thiel at the Bitcoin conference in April 2022. But now there's a lot of talk, about this guy Thiel. And he has been a very vocal supporter of Bitcoin. And he spoke out against those who were critical of cryptocurrencies, which is good. And he covered that in Bitcoin Miami 2022. I'll talk more about what he said about those guys. But what's really weird is apparently he cashed out maybe in March or April or May 2022 out of his Bitcoin holdings in his future fund. So I don't know how much of this is true. As the story broke by the Financial Times, covered by everybody else in the meantime over the last 24 hours. But we'll see. That would not be good, mocking others that hate Bitcoin and you yourself abandon ship. But then again, he has been in for a long time, over 8+ years, 9 years by my recollection. So it's always good to take profits. And maybe he saw a top that many of us didn't. Anyway, he sold right before the dip. So let's talk about what I said. This is my slide actually from April 7th, 2022, when he spoke at the conference. And he picked up a word that I wasn't even familiar with. It was the gerontocracy, I think it was. Basically a state society governed by old people. And he believed that Bitcoin was a revolutionary youth movement. He also attacked bankers, including Jerome Powell, And Thiel said they've chosen to ignore it and they will have to pay the consequences for that in the years ahead. He said Buffett was a sociopathic grandpa. Larry Fink, he didn't say not very kind words you say about these people, but that was him. And, so goes it. So you can't trust anybody, which is the big lesson from 2022. Anyhow, next, the World Economic Forum. All these meetings are happening in Davos and they are comical. Oh my God, the stuff that they're saying, it's kind of ridiculous. But it's good that the world sees how ridiculous these elitists are. And despite calling for laws, they are really, really concerned about Bitcoin. And they believe it's inherently speculative. It's a Ponzi. It's crazy. And they would love to shut it down if they could, because they have different plans for the world. But the world is onto the WEF. And their marketing has not been good. But there was an interesting piece of news, I think it was from one of the UBS executives, a guy called Keller. He said Bitcoin is unstoppable, despite everything else that could be going on. But it's important that it's never, ever used for things like money laundering, like the way cash is used for money laundering. Anyway, enough of that. The WF are very concerned as thousands of private jets fly in, destroying the environment. They're there to save the environment. Again, irony is not lost on me. That should have called this video today. The irony is not lost on me. Anyhow, let's talk about some more good news. CleanSpark expands in Georgia. This is a really good expansion alert. And, during what was 2022, we saw some Bitcoin miners die, but CleanSpark has always been in our top 2, and they have been thriving during the bear. And this is a so-called expansion alert. CleanSpark has broken ground on phase 2 of their Washington, Georgia Bitcoin mining site. It'll hold over 16,000 miners. And it's a 50 megawatt plant that they will open in late spring. And they expect their hash rate with this addition to hit, I think, about 8.7 or 9 exahash, which will make it one of the top miners out there on Earth. So they are thriving, they're making it happen, and they're keeping their debt in check, which we look very closely at. In other news regarding Cardano, and by the way, all the Cardano army was in my comments from yesterday's video, where I talked about Cardano being a top 10 shop from a number of developers. People seem very happy with that. So here I am mentioning Cardano again. Charles Hoskinson is very interested in Coindesk. And no ifs, ands, or buts. And he talked about the fact that he would like to buy this magazine from digital currency group DCG, who are apparently going under. Now, I think DCG bought the magazine for $500,000 in 2017 or 2018. I'm not sure exactly. But now they want between 50 million and 200 million. I think, getting my spidey feel, I think maybe Charles would pay 50 million for it. I'm not sure. But his focus on this is really to bring back journalistic integrity. And I think that is not actually dissimilar to what Elon Musk is trying to do with Twitter. Bring truth to power, make sure people aren't silenced and shut down. So maybe Charles and Elon should have a little meet. Who knows? But anyway, and Charles did say as well, he has felt he's been very unfairly treated by the media in the past, and many outlets have an agenda to push, and that's not the Cardano agenda. So he feels maybe he needs his own media platform to talk about his stuff. Let's look at the Cardano chart real quick. A nice little uptrend here off the 25-cent bottom. And based on this little chart here, we are right bang between the 50-day moving average and the 200-day moving average. 200 days in red, 50 is in green. And it wouldn't surprise me if we hit 40 cents in the coming weeks, especially if the crypto market continues to gradually ascend, just like other assets out there. Now, another crypto news, or should we say the transfer of TradFi over to crypto. Robinhood rolled out their Metamask/Phantom competitor. This is the Robinhood wallet. It was tested with about 10,000 people back in September, as far as I recall. And now they have a smartphone app that allows users to swap and transfer crypto and view owned NFTs and do a whole bunch of other stuff. And there's 1 million plus people that are going to go live on this. It's iOS only, I'm afraid, for those people that run on Android. And the wallet itself actually leverages Polygon to operate. So again, we're going to see a lot more of this, a lot more of the mainstreamification of crypto through platforms like this. Remember, the wallet is key to adoption. So kudos to Robinhood. Love him or hate him. Now let's talk about getting back to truth and media and all that type of stuff. This was kind of interesting. These are the top brands that have ditched Twitter as an advertising platform since Elon Musk took over. And I just want to see that this is kind of a pattern. I always try and find patterns and stuff. But from these top 30 companies, advertising spend with Twitter fell by 42% to an estimated about 50 million, 55 million in November and December combined. But if you look at the names, you've got, I know HBO's on there, but who knows about that? But you got drug companies and bad food companies. They're the ones that kind of hate him the most. And good riddance to them, because we don't need people pumping Coca-Cola into children or anybody else, or Kraft food company just make processed junk. So anyway, enough of that. Let's move on. So Tesla, speaking of Twitter and Elon, since their price cut, it has absolutely wreaked havoc not only on ICE car makers, but also EV car makers and the whole secondhand car market and the companies that run secondhand car market sales. The demand has exploded for these new cars, and now the amount of excess inventory is quickly going to zero. This is either a genius stroke, which I tend to believe it is, because it's going to wipe out a lot of the competition. Another EV maker, I think, hit the wall yesterday or today. But it's going to be scary, especially when you look at the Parity. Now, there was a cool story on, I can't remember the magazine, but I looked at in Denmark, in X3 BMW for sale. The price of that X3 BMW in Denmark, for the same money, you could buy a Model 3 and a Model Y. It just makes no sense. You get two cars for the price of one, and both of those two cars are superior. But this is a cool little graphic that I came across, and it looks at the VW ID4 against the Tesla Model Y. Tesla Model Y is now cheaper. The battery is slightly smaller. The range is slightly less, but the speed is dramatically different. The charging speed is different, 0 to 60 in 6.9 seconds versus 10.4 seconds. Top speed, 217 kilometers an hour versus 160 kilometers an hour. 160 is 100 miles an hour for those who speak old school, and 217 kilometers an hour is enough to get you banned from driving in the United States. The weight is a lot less, about 230 kilos less. Cargo capacity a lot bigger, etc., etc., etc. Towing capacity 1,600 kilograms versus 1,200 kilograms. And I know the Europeans like to tow stuff as well when they go on vacation. But that is stunning. Now with the price cuts and the tax credits, how can, forget ICE competitors, they're toast, but other EV manufacturers are going to be brought to the brink. People will only do this if they're desperate to get an EV and there's no other ones for sale. So it's going to be a global domination play. I am absolutely confident in that one. Let's talk about gold for a second. Gold is bumping up against resistance here, but I'm sure people like Peter Schiff are very happy that gold is back up at $1,930, and that's the highest price since April of 2022. But if you look at that chart here, you can see that's where it previously met resistance. Now, it did go nearly as high as, I think, 2,100 or above 2,000 during the Ukraine invasion, but ever since then it kind of fell back down to earth. But we'll see what happens. Well, that's interesting. Now, the reason I care about gold is, will digital gold follow gold? Not yet to this level. I mean, we're looking at very close to a 12, 13-year high for gold. But the question is, when will Bitcoin rebound? That's why we care. Now let's talk about another little chart here. This is the yield curve inversion. Everybody is literally looking at this now, and it keeps going higher. This is the highest yield curve inversion I can even pull up in the history of my trading view, which goes back to the 80s. And you can see the red line is where the inversion happens. And that chart is just going up and to the right. And this typically signifies an impending recession. I'm pulling up the math of, I promise no math, but just a couple of numbers that I know that if you look at yield curve inversion since the year 1900, it has happened exactly 30 times. And in 22 or 23 of those instances, or 70% of the time, it does lead to recession. So who's taking those 70% odds of going to a recession? Many people are, because now everybody's talking about it. But this is extreme and it's getting worse and worse. Now let's talk about Netflix. I never talk about Netflix, but here it shows that people were very worried about earnings season. This hasn't slowed Netflix down, and Reed Hastings, he's moving to the chairman role. He was the CEO for a long time and built this company from the ground up. But subscriber gains in the fourth quarter were huge, up 7.7 million new customers. And its goal was to add 4.5 million during the period. Now, revenue rose about 2% to, I think, about $7 or $8 billion. But the fourth quarter earnings, the net profit plunged 91% to 55 million because they got hosed on a Eurobond currency hedge that dinged them. And again, everybody be careful of things like currencies and commodities. You're in the hands of political leaders and you don't know where this is all going to go. So they lost a truckload of money on their FX hedge out there. So that be a lesson to you all. In addition, let's talk about US savings versus putting it on the credit card. And this is also the same all over the world. Again, US is an analog. But if you look at these charts, they are from Zero Hedge. If you look at the green line, that's the personal savings. People are saving about 2% of their money. They're spending 98%. And the credit card or revolving credit is going up and through the roof. That number is coming up to $1.2 trillion owed by Americans on credit cards. But that's only part of the problem. Obviously, things are getting more expensive. Things are getting tighter. Wages aren't keeping up with inflation. People are struggling. But when you look at the average credit card interest rate, I looked at two of my statements again last night. They were at 39% on one of them. I couldn't believe it. But of course, don't carry a balance. Just pay it off immediately if you can. And but thanks to the Fed's crusade to spark a great recession, and they're doing it, the average rate across US credit cards hit an all-time high of over 19%. And again, many of them are a lot higher. But this is causing a lot of problems. And I've been talking about the fact that I expect a lot of delinquencies to hit in 2023. Well, here they are. Let's look at this. This is Discovery card, credit card. And this was announced yesterday after their earnings. And the results for Discovery, the credit card company, were not bad in 2022. But their forecast was a stunner. They gave a presentation and they believed that charge-offs, which is write-offs of debt, would hit 3.9% this year. And that is more than double what they had in 2022. 1.82 to nearly 4% of charge-offs. And the consensus estimate was about 2% and change. So that is dramatic, everybody. They expect a lot of delinquencies, they expect a lot of bad debt, and they're making allocations. In fact, their competitor, this is Capital One, they just cut more than 1,100 tech jobs within the firm. Discovery cut some people not too long ago as well, late 2022, if I remember correctly. And the whole industry is on tenterhooks. But it's not just these guys. Let's talk about the debt ceiling drama. This morning I tweeted this. I've seen over 25,000 times. Wow. But the debt ceiling was breached, as we knew it would, today, Thursday, the 19th of January. And mainstream media is panicking, and there's drama. And of course, we know the world is built on fiat and debt. That's why we talk a lot about this. But the government spending is greater than government revenues, especially in 2023, because there's going to be no tax revenues from capital gains. Government programs are very wasteful, and fiat is not backed by anything. So all they're going to do is print to infinity. But that number there, 31.498, by the time I look at this website again, it's going to be over 31.5. It keeps going up. It cannot be stopped. So what is Janet Yellen doing about it? Well, this scared me. So the debt ceiling is breached. Now, Janet Yellen, the Treasury is tapping retirement funds to avoid breaching the debt ceiling. They're reaching into other pockets to be able to fund this. And the debt groups they're going after is the Civil Service Retirement and Disability Fund as well as the Postal Service retiree health benefits, and maybe a few more. And again, they are invested in special treasuries. So they're just reaching over and pulling money from future obligations to people who are pensioned, retired, and require these benefits. But if you look at the other numbers as well below, you'll see here US unfunded liabilities. Last time I showed this number, it was under 179 trillion. Now it's nearly 181 trillion. The pace at which these numbers are growing is staggering. Like literally, you can sit and watch them and you get mesmerized with true number go up. This is why we do Bitcoin. Because this is not sustainable. This is just going to keep on going up and keep on going crazy forever. But the fact that they're tapping into people's retirement funds, that is shocking. That article, by the way, is from Bloomberg. So with that, everybody, sorry to end on that sad note. Just be careful. Look after yourselves, everybody, and I'll see you all tomorrow. Thank you all for being here. Thanks to the mods in chat. Have a good night.